Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, let's talk about the fluctuations in specific stocks. Today, Apple has closed up 1.02%. SQQQ closed up 4.28%. SPY closed down 0.6%. And United Natural Gas closed up 0.62%. Today, SPY's closing downward make me to realize that it is about the time for the stock market rally in the beginning of this year to end like last year did. People will start to begin to realize the inherent risks behind the Federal Reserve's pushing back the dates for the interest rate decrease. So I'm looking for an opportunity to sell out SPY in any time soon. Today, the market generally closed lower. Dow Jones Industrial Average closed down 0.18%, Nasdaq closed down 1.16%, and S&P 500 closed down 0.65%. Today, the industries that was most significantly affected was the semiconductors that closed down more than 4% due to Nvidia's stock fluctuations. And we will also talk about that later. As of recently, the US stock panic index rose 7% last week, and Nvidia's stock price plunged to release a signal for risks. In the last week, the job market reinforced the Fed's easing outlook. Judging from the February non-farm payrolls report, the latest employment data seemed to show cracks in the labor market. While the number of jobs added in February was more than expected, the U.S. Department of Labor revised down sharply for January and December. At the same time, the unemployment rate rose to 3.9%, the highest level since 2022. Which is similar to the previously released job vacancies and ADP employment reports. Bob Schwartz, senior economist at Oxford Economics, said in an interview with CBN reporters that behind the data, the distribution of jobs growth is becoming a more narrow, with healthcare, leisure and hospitality, and the government sector accounting for nearly 3/4 of the new jobs. Medium and long-term U.S. Treasury yields fluctuated and retreated, with the 2-year Treasury note now falling 4.7 basis points for the week to below 4.5%. The benchmark 10-year Treasury note fell the most recent 5-week at 4.09%. The Fed Chairman Jerome Powell revealed little information in Congress last week. He reiterated his previous views, and however, his mention of the possibility of a rate cut is not far from confidence that inflation is moving towards the 2% target. After investors digested the latest economic data and Powell's speech, federal funds rates futures show that expectations for a rate cut in May edged up to around 35%, with June remaining the most popular option in the eyes of the outside world. ING wrote in a note that the Fed is increasingly declined to gradually return policy to a more neutral level, maintaining its view that June is the starting point for the rate cut as economic data softens further. The Fed will still focus on the direction of wage growth and the performance of CPI and PPI indicators. And then let's talk about Nvidia. Last week, the US stock market was full of ups and downs, and the market's confidence in June interest rate cut was boosted by the Powell's speech. Funds flow showed that investors increased their holdings of the US equity funds for the 4th consecutive week, according to data provided by the London Stock Exchange. Net inflows to the U.S. equity funds reached $1.2 billion last week. At the same time, commodity futures and Bitcoin funds, represented by gold, are also continuing to increase in holding by investors. However, the rally did not apply to Nvidia because of investors' growing discovery that in Nvidia's inherent problems in its product structure and also stock valuations as of current prices. However, the chip giant Nvidia fell more than 5%, the largest one-day decline since May 2023, and its market value evaporated by $130 billion, driving the Philadelphia Semiconductor Index to fall from a record high. Technical factors may be one of the reasons, with some industry insiders saying that after the stock price broke above $900, the momentum indicator relative strength index climbed above 85 at one point, the highest since November 2021, indicating the stock is ripe for a correction. Mizuho analyst Jordan Klein commented that Nvidia's sharp fall is the so-called rally exhaustion. When the chip stocks start to fall, you will see a sell offset by quantitative trading and then retail worries, which will only accelerate. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.